Good morning, everyone. It's JJ from microefutures.com. I hope you are all having a wonderful weekend. Here's our weekend update video for October the 20th. And what this video is meant to do is to tell you what has happened and what we think is the next course of business, right? Or the next thing to happen in the business agenda, right? So let's take a look at our what we call our bird's eye view chart. Now, this is a market profile chart. And what market profile does, it's a beautiful tool because it can quickly help you identify where the inventory is in a market and whether that inventory is being distributed, sold for profit, or if it is being accumulated to be resold later on for profit. So as you can see, this market now, all the inventory is underneath 58.42. So if you went and drew a big box here, 58.42, that's the acquisition of the inventory. And now we are in what we call a distribution, right? The inventory is being distributed above 58.63. How can you tell? Because the blue area, which market profile folks call the value area, I call that the cost basis. It's a little bit more clear. Here's the cost basis of your inventory, and here is where you are selling your inventory. And you can quickly identify and see that the inventory is being sold higher for profit. So for you dyed in the wool short sellers, really there's not going to be any change until we take out 58.63 and take out this level right here, which is right around 58.55. Until we take that level out and until the market goes underneath. And why would it go underneath? Because the people who are long here need to put it on sale to attract buyers, right? If there is no need to put it on sale, the market will continue to trade sideways in this large distribution balance. Okay. And that's what's going on right now as we're in earnings season. There's not a lot of real incentive or reason to put the market on sale as we have bidders who are willing to pay. And you can see we moved up, did a little inventory correction lower, moved up against off of it. Now, there's a couple of things that market profile really help. One is single prints. The other thing is showing a poor low. The single prints tell you where the shorts are trapped. The poor low confirms that they are trapped and buyers are competing at that level. This is an overnight profile, and you can see the overnight profile went into the single prints, but the next regular trading session was unable to get into those single prints. Now, what does that mean in simple English? No gobbledygook, no double talk, right? Simple English, it means that the traders at night gobbled up all of the supply underneath 58.84. And when the market opened, there was nothing for sale under 58.84. This means you shouldn't be shorting down here. Very simple. Okay. What you want to do is you want to look for where the buying is and buy off that level and have the buyers push price up because there's a lack of supply. That's how business works. Don't let anybody tell you any different. Okay. If you're tired of indicators that don't work and of losing money, try a little common sense, which is what we teach, right? So this tells us that short sellers are trapped here. This tells us that they grabbed all the supply. You can see the volume here, right? They grabbed all the supply the night before Friday opens, can't get down there. No reason to sell under 84 if you don't have to, right? Okay, so that is the overall sort of direction is going to be sideways. Okay, we put in an all-time high a couple of days ago, right? So if we get above 59.25 short sellers, consider yourselves warned. All right, now let's go take a look at, here's the market profile. When you break it down, here you can see this is exactly where those short sellers got trapped on the 16th. They're trapped underneath 58.82. And there's that poor low the next day confirming that they're trapped. Very easy to spot on market profile. The overnight went in there, spent half an hour or so under there, and then you'll notice that the subsequent half hour candles could not get down underneath 82 and a half. That tells you that there's no more supply under that level because the sellers who are long, they see that they're buyers. Why would they sell cheap if you don't have to? It just doesn't make any business sense. Common sense is something that we can use in retail trading. Don't let anybody tell you any different. Friday's low, nowhere near 58.84, nowhere near those single prints. As long as these levels hold, there's no reason to get into a big short. Okay, so I'm going to show you there on a candle chart as well, right? For those candle traders, here are the areas of inventory. Okay, these large volume nodes, you guys call them, right? It's inventory, folks. It's a market. Don't ever forget it's a market, right? No matter how much double talk they spew at you, how much fancy language, remember it's a market. And the goal of a market is to take cheap supply and sell it at a higher price for a profit, right? Don't let anybody tell you any different. If they do, they're lying to you or they don't know what they're talking about. So 59.16, if this market gets above that level and accepts, it means all of the supply is underneath us and there is no reason to put it on sale. So if we start taking out 59.16 to the upside and that all-time high up here, don't be fooled. Don't just short a market because it's going higher. Okay? New favorite saying of mine. If you don't understand something, that's not a reason to short it, right? If you don't understand it, don't fade it, right? Reach out to us at microefutures.com. We'll help you understand how markets move. If you understand how and why they move, you're less likely to make bad business decisions. Bad trades are bad business decisions. Okay. Sure, sometimes you get stopped out because of order flow, and that's going to happen. But generally, most traders lose money because they're trading at the wrong time in the wrong direction because they have no idea why the price is moving, and some schmuck told them that it was random. Nothing is random when there's this much money on the table. So here it is for you candle folks. This is a half-hour chart, little volume profile. Now let's go take a look at an in-depth look at where the stops are for your Sunday night trades. Okay, so we closed here at 59.07 and a half. You'll notice the last hour of trading closed higher than that 4 o'clock close. Okay, what does that mean? That means that there are shorts trapped under 58.99 and underneath 59.01. So any kind of liquidation, you're going to use that 59.04 stop to see if there's any response. If we break that stop on the open, look for responsive buying at 59.01. And if that breaks, 58.99. Okay, and if we break that, we'll come out of Friday's cost basis. Your levels are 58.94, 58.91, and of course, Friday's low around 58.86 and a quarter half. Okay. To the upside, if the market opens and cannot take out 59.04, look for rotation higher, these upper stops, and come out of cost basis. If we get out of Friday's cost basis, it means people are willing to pay more than what was the course of business on Friday. If we get above 59.12, your upper stops are 59.14 quarter and Friday's high of about 59.15 and a half. Okay. If we get above Friday's high, right, your big upper stops are going to be up here, 59.25. That's the all-time high. So come learn how to trade using common sense. Learn how to trade with the business, right? Make good business decisions. Manage your risk intelligently, right? Then you won't have all of these issues that retail traders deal with, like FOMO, revenge trading, all of these things which have no place in a business. And remember, you're all small business operators. Okay. So if you want to learn how to trade with all the double talk, all the, crazy language with a bit of common sense, old school, I like to call them blue collar trades. We trade for a living so people can make an income so they don't have to waste their entire lives chasing this thing, right? Learn how to trade with some common sense. Visit us at microefutures.com. We have a 7-day free trial, and we also offer one on one coaching. Come hang out with us for 7 days. I will happily do a one on one consultation with you if you're interested in our lifetime coaching. And that's right, it's lifetime. You know, we believe in being there for the trader through their progression. That's why we only charge them once, right? There's no additional fees, no add-ons, none of that, crazy, pyramid marketing stuff. So come join us for 7 days on a free trial. Reach out to me. I'm happy to do a free one-on-one consultation over the phone. If you want to look into the lifetime coaching, I will do a 1 hour session with you so you can see what to expect, how I teach, see if it works for you. And I'm always available. I hope you have a wonderful, wonderful weekend. Be safe out there. I will be on with Wolf Financial tonight at the Globex Open. Thanks, everyone. I'm JJ. We'll see you soon. Stay out of trouble, traders. And if you can't stay out of trouble, don't get caught. Bye for now.